Great. So when you talk about multiple products, we are basically looking at more than one product. And of course, they are sharing the same raw material, or you want to look at the quantity you're going to produce for you to be able to maximize on the output of the company. Now, and of course, even operate at break-even point. The first thing we are going to do is to access that question. Let me just put it from here. December 2024, question number 5. December 2024, question number 5A. So the question reads, question number 5B. We're talking about Maya Limited. So Maya Limited produces two products, namely product M and product Y. The following budget applies for the year ended 30th June 2024. So we are given selling price per unit, variable cost per unit, we are given contribution per unit. Then we are also given fixed cost, unit sold. Then required, we have break-even point at current sales mix. We have break-even point at a proposed sales mix of 1:1. The current margin of safety, the sales units required to earn a profit of 299 million at current sales mix ratio. So of course we can do this in thousands or just have all the figures there. Now it's going to address the few things that we talked about. Number one, let me just bring back the formula of dealing with multiple products. So our formula was for us to get break-even point in units when dealing with multiple products is equal to total fixed cost plus target profit, if we'll have any, right, divide by summation of weighted average contribution margin. We say that summation of weighted average contribution margin is equal to sum of alpha, right? We all know what alpha is, but sales mix ratio multiplied by contribution margin, And we say contribution margin is equal to selling price per unit minus variable cost per unit. So we are talking about how many products. We are dealing with two products here. So the first product, we are having product M. So we can actually start with the sales mix ratio. Now that we have been given contribution margin, we have been given contribution margin for each product. So the only thing we need to take care of is the sales mix ratio. So the sales mix ratio, we have M and we have Y. Can we look at the expected sales, right? Expected sales. So for product M, we have expected sales to be 70 million bags. We have 70 million bags. Then product Y, we have 30 million bags. We have 30 million. We have 30 million bags. That is the expected sales. Can we get the total? Sales? Total expected sales? Total expected sales will be how many units? Total expected sales will be equivalent to how many units? It is basically 70 million plus 30 million. What are we getting? 70 million plus 30 million. 70 million plus 30 million. We are getting 100. We are getting 100 million. So product M has got 70 million, of the 100 million. Product Y has got 30 million, of the 100 million. Of the 100 million. So what percentage are we getting here? You can put it as a percentage or in decimal places. What are we getting for product M? 0.0 0.7. How about Y? How about Y? How about Y? Hey, we are at about 47 in this class, but we are not so active. What is not happening? So product Y will be 0. That is 0.3. So that is our what? That's our sales mix ratio, right? That's how we get our sales mix ratio. So let's come to this part. We're talking about product M. We're talking about product Y. So let's have contribution margin. Contribution margin. Our contribution margin for product M, that is contribution per unit, is given as 4 shillings. For product Y, is given as 8 shillings. Then, do we have the sales mix ratio? Yes, we have alpha. Sales mix, for M it is 0.7, for Y it is 0.3. Can we now get average or weighted average contribution margin? Weighted average contribution margin. Weighted average contribution margin. How do we get weighted average contribution margin? It is sales mix ratio multiplied by contribution margin. Our sales mix ratio is 0.7. Contribution margin is 4. So 4 times 0.7. 4 multiplied by 0.7. 4 multiplied by 0.7. So you're getting 2 points. You're getting 2.8. How about Y? 8 by 0.3. 8 by 0.3. We are getting 2 points. We are getting 2.4. Good. So once we have that, can we now go ahead and get the summation? The summation of weighted average contribution margin is equal to 2.8. Then we add 2.4. That will give us 5 points. That will give us 5.2. So can we now get our break-even point in units? That is equal to total fixed cost. Do we have total fixed cost? Do we have total fixed cost? If yes, how much is the total fixed cost? How much is the total fixed cost for the company? Total fixed cost for the company. Total fixed cost for the company. Somebody to help us there. Total fixed cost. We have fixed cost for product M. We have fixed cost for product Y. So get the summation of the two. Get the summation of the two. 296,400,000. 296,400,000. So our break-even point is 296,400,000 divided by 5.2. So what are you getting as the break-even point in units? What is our break-even point in units? For the company to operate at the break-even point, how many units should this company sell? 57,000 units. Now, the 57,000 units has got both components of product M and product Y. So why can't you now distribute them to these 57,000 units to the two products? So product M will take its share by using the sales mix ratio. Product Y will take its share using the sales mix ratio. So 70% of 57,000. 70% of 57,000 itakuwa ngapi? Oh, we are getting 57 million. We are having 57 million. 70% of 57 million, 39,900,000. 39,900,000. How about Y? 17,100,000. 17,100,000. Good. Now, up to that particular point, are we able to verify that when we sell 39,900,000 units of M and 17,100,000 units of Y, we'll be able to operate at a break-even point? That is to say, we'll not have a loss, we'll not have a profit. Let's just confirm. For the benefit of everyone, let's just confirm. So under revenue, or you can actually pick it from the contribution, because we already have contribution per unit. So we just get total contribution. You don't need to go back to the variable cost, total revenue, come back to contribution, margin, then we less fixed cost. No, let's pick it from the contribution. So can we get total contribution? Total contribution at break-even point, where we need to sell 39,900 units of M, 17,100 units of Y. So the contribution per unit of M is 4. And remember, we are talking about how many units of M? We're talking about 39,900,000 plus contribution per unit of Y. Contribution margin per unit of Y is 8 multiplied by 17,100,000 units of Y. So when we add this, we'll be able to get total contribution for the two products. So how much are you getting? How much is your total contribution? How much is your total contribution? 4 by 39,900 plus 8 by 17,100. What are you getting? You're supposed to put that in your calculator, then it gives you the answer directly. What are you getting? What are you getting? 296,400,000. So you're getting 296,400,000. Then from that, we just need to less fixed costs. Our fixed cost is constant, it is not changing. 296,400,000. 296,400,000. Now we talk about net profit or loss. So our net profit or loss is equivalent to, zero. Equivalent to 0. So it confirms to you that when you produce 39,900 units of M and 17,100 units of Y, you'll be operating at a break-even point. What is the total units at break-even point? 57 million distributed using the sales mix, ratio. Good. So we have been able to verify that. We have been able to verify that this unit will actually give us a net profit of 0 and a loss of 0. Now, if you are told to give us margin of safety, how do we get margin of safety? So margin of safety, we said, is equal to expected sales minus break-even point. Expected sales minus break-even point. So the expected sales, we are having 70 million, 30 million. That is 100. That is 100 million. So expected sales is 100 million. Expected sales is 100 million minus break-even point, which is 57. Which is 57 million. So that will leave us the total of how much? For how many units? We are doing it in terms of units. We have decided to do it in terms of units. That will give us 43 million units. Now, the 43 million units, it means you are allowed to reduce your expected sales from 100 million all the way to 57 million. You are reducing it by 43 million before you start talking about any loss. Should you reduce your expected sales to get a figure below 57, you'll be talking about a loss. Should you reduce your expected sales from 100 million and you reduce it by a figure more than 43 million, then what will be happening? You will be talking about a loss. So this is our margin of safety. Once you have this margin of safety, you can actually now distribute it to the two products. So let's start with the product M. What is the margin of safety of product M? It is 70% or 0.7. 0.7 we multiply by 0.7 we multiply by 43 million. So what are we getting? 0.7 by 43 million. Then for product Y, we are talking about 0.3 by 43 million. So let's start with M. 0.7 by 43 million. 0.7 by 43 million. 30 million, 100,000. 30 million. 30 million, 100,000. How about Y? How about Y? How about Y? How about Y? 30% of 43 million. 12 million, 900,000. 12 million, 900,000. Is it true? Is it true that when we also do it directly this way, we already have expected sales for product M and also expected sales for product Y? So it means margin of safety here for M, I just need to check expected sales of M, which is 70 million. Then I less break-even point of product M, which is 39,900,000. Then for product Y, I will also take expected sales of 30 million. Then I less break-even point of Y, which is 17,100,000. Can you confirm to me that 70 million minus 39,900, 70 million minus 39,900 is equal to 30,100,000? Please confirm. In other words, what is the answer? 70 million minus 39,900,000. 70 million minus 39,900. What are you getting? We are getting 30 million. We are getting 30 million 100,000. That 30 million 100,000 you can see is the same as our margin of safety when we also when we also use the sales mix ratio to be able to get that. Then how about for Y? When you take 30 million minus 17,100,000, what are you getting? 30 million minus 17,100,000. 30 million minus 17,100,000. We are getting 12 million. 129 million. That only confirm? Is it 129 million or 12,900,000? 12 million. So you're getting 12,900,000. You're getting 12,900,000, which of course is equivalent to what we are getting this other side. Good. Can we go ahead and get our margin of safety as a percentage? So margin of safety expressed as a percentage is basically equal to the margin of safety, which is 43 million, divided by expected sales, which is 100 million. Is 100 million. Then of course this one here we express as a percentage. So what are you getting as the margin of safety? Margin of safety expressed as a percentage. Margin of safety expressed as a percentage. What are we getting? Margin of safety expressed as a percentage. We are getting 43. We are getting 43. We are getting 43%. We are getting 43. We are getting 43%. We are getting 43%. Great. Now, the next thing you're supposed to do, what if you are told that this expected sales is giving us a sales mix ratio of 0.7 is to 0.3. That is what our current expected sales is giving us as the sales mix ratio. So the current sales mix ratio is 0.7 is to 0.3. What if someone decides and interferes? What if someone decides and interferes with the current sales mix ratio? What if someone decides and interferes with the current sales mix ratio? So the sales mix ratio, that is product M and Y is now changed to be in the sales mix ratio of 1:1. What are we doing for us to be able to get total? You can see you are taking this plus this one here, then we're dividing by the total. Now, at this particular point again, the ratio of 1:1 or 2:3, you first of all add the two figures. So 1:1 is the same as, that is, you take 1 plus 1, it will give us 2. So it means this product M will be having 1 over the total. Product Y will be having 1 over the total. And that is the same as, so half is the same as 0.5, 0.5. That's how we deal. That's how we deal with it. So let's say the sales mix ratio is given as 1:1. So we take now 0.5. We take 0.5. Can we now get the weighted average contribution margin? Our weighted average contribution margin is equal to contribution margin times the sales mix ratio. So 4 times 0.5, what are you getting? 4 times 0.5, that should be 2. 8 times 0.5, 8 times 0.5, that should be 4, right? So it means the summation of weighted average contribution margin is equal to 2 plus 4, giving us 6. Our total fixed cost is not changed, it is still constant. So can we now get break-even point when we change the sales mix ratio? Can you get the new break-even point when we decide to change the sales mix ratio? Break-even point. So a break-even point is that part 2. Okay, I don't want you to focus on required. I want to focus on the concept, because I've also confirmed whether our break-even point will give us a net profit of 0. It is not part of what is required there, right? I've also confirmed that what is the actual units that each product will be having, right? We have been able to use the sales mix ratio to get the break-even point of each product, right? Yeah. So number 1, you are getting our break-even point in units. Number 2, you are getting the margin of safety. Number 2, we are getting the margin of safety in units, right? And of course, we have been able to see we can get the margin of safety for all the products, then distribute that using the sales mix ratio. Alternatively, once you have the break-even point for each product, you take expected sales for individual product minus its break-even point so that you get margin of safety. To get, again, the margin of safety expressed as a percentage, we have been able to take the margin of safety in terms of units, divide by the total expected sales, multiply by 100, which has given us the figure in percentage. So we are now coming to this part. What are we interfering with? We are interfering with the sales mix ratio. What will the change in the sales mix ratio do to our break-even point? That's where we are. So initially, we were having 0.7 is to 0.3 or 7 is to 3. Now we have 0.5 is to 0.5, which is the same as 1 is to, which is the same as 1 is to 1. Now, if you work it out, we are getting summation of weighted average contribution margin to be 6. Our break-even point is, our total fixed cost is 296,400,000. And our formula for the break-even point is total fixed cost, which is 296,400,000. We divide by summation of weighted average contribution. So what are you getting as the break-even point in units? What is our new break-even point? Our new break-even point is 49,400,000. 49,400,000 units. Can we get the share of each product? So product M. Product M, remember we are going to distribute this based on the sales mix ratio. So product M has got 0.5 of the 49,400,000. Product Y has got the same 0.5 of the 49,400,000. So what are we getting? What are we getting? 24,700,000. 24,700,000. 24,700,000. I hope you have the units. Are you able to give me break-even point in shillings? Can we get break-even point? Break-even point in shillings for each product. Break-even point in shillings. So let's start with product M. Break-even point in shillings for each product. Because if you look at our table there, if you look at the table given up there, product M has got a different selling price from the product Y. Product M and product Y have got different selling prices. That is why we cannot directly take the 49,400,000 multiplied by the selling price per unit to give us the break-even point in shillings. We can also not apply the contribution margin ratio to be able to get the same thing. It will not work. So what do we need to do? Once we have the break-even point in units for individual product, we multiply by its own selling price. So go to the table that we are given and look at the selling price per unit of product M. It is 6 shillings. So if you take 6 shillings multiplied by 24,700,000, we'll take for product Y, the selling price per unit of Y is 12 million. So 12 shillings multiplied by 24,700,000. So please go ahead and give me the break-even point in shillings for product M. Product M, 148,200,000. 148,200,000. Of course, this one here will not be the same because it has got a different selling price. How about product Y? How about product Y? The break-even point in shillings for product Y. The break-even point in shillings for product Y. 296,400,000. 296,400,000. So go ahead and get the summation of the two. Remember, you'll be told to give us the break-even point of this entire company. So what is the break-even point in shillings for the entire company? Break-even point in shillings for the entire company. Get the summation of the two. 148,200,000 plus 296,400,000. What are you getting? What are you getting? That should be 4,444,600,000. So that is 444,600,000. That is according to my good friend here, Esther, and Shadrach, and Emily. Great. So I believe we are all getting the same thing. I believe we are all getting the same thing. So what we are actually doing is very, very simple. It's as if we are doing what we call, it is not given out directly, but what we are doing is called maybe sensitivity analysis. Under sensitivity analysis, we are changing one variable at a time. Under sensitivity analysis, we are changing one variable at a time, right? So the first thing we have done, the first part, we have been able to interfere with the sales mix ratio. When we interfere with the sales mix ratio, this is the result of that effect. When you interfere with the numerator, the total fixed cost, you will have a different break-even point. When you interfere with the denominator, the variable cost, when you interfere with the variable cost, which will be affecting our weighted average contribution margin, because weighted average contribution margin depends on the contribution margin. Contribution margin is also affected by the variable cost per unit. So if we change just an item within our formula, what will happen to the break-even? What will happen to the break-even point? And we have been able to see how all those changes are affecting our break-even point. Now, the next thing you're supposed to interfere with is, what if you are given the target profit? What if you are given target profit? What will happen to our break-even point in units and also in shillings? If you are told that the target profit is equivalent to this particular amount, right? If you are told that the sales units required to earn a profit of 299, so you have a target profit of 299 million. So let's just come to this part and then see how to deal with it. We'll do away with this. Then we have the right thing. We'll do away with that. What are they telling us? Are we dealing with the current figures or the proposed items under Roman 2? Under Roman 2. So let's say you are to use the current. These are the current data. So the current data here, our sales mix ratio is 0.7 is to 0.3. 0.7 is to 0.3. Then we need to get our weighted average contribution margin. You are getting 2.8. We are getting 2.4. So that was giving us summation of weighted average contribution margin to be equal to 5.2. Now, our total fixed cost, we have proposed activity. We can talk about proposed activity. So the proposed activity, they are not interfering with the total fixed cost. So total fixed cost is still constant, and we have 296, 400,000. The only thing that is being introduced here is what we call target. We are introducing what we call target profit. Our target profit is equal to 299 million. Our target profit is equal to 299 million. So how do we get break-even point in units? How do we get break-even point in units with a target profit? It is very simple. It is total fixed cost plus target profits. And it is very simple, also direct, because the target profit we are having here is target profit before tax. If it was target profit after tax, then of course you must have the tax, you must have the tax rate. How did you get 5.2? So 5.2, the summation of weighted average contribution margin. What we are having is weighted average contribution margin. So when I take now 2.8 plus 2.4, that is now what's called the summation. So the summation here, when I add these two, it should be giving you 5.2, unless it is a different figure. So confirm that what I was given here as 5.2 is correct. Esther, confirm. is 2.8 plus 2.4 equal to 5.2. Thank you. Good. So when you come to the break-even point in units with the target profit before tax, we divide that by the summation of weighted average contribution margin. So I come to this part. Our total fixed cost is 296. Our total fixed cost is 296, 400,000 plus 299 million divide by summation of weighted average contribution margin, which is 5.2. So how many units should this particular company sell to be able to operate at the break-even point or to get the target profit of 299 million? What are we having there? You take 296,400,000 plus 299 million, right? Divide by 5.2. What are you getting? What are you getting there? What are you getting there? 114,500,000. Something that 114 that is what we are getting, right? 114,500,000 units. Can we distribute them to each product? So product M has got only 70% of that, or 0.7 of 114. Product Y has got 0.3 of product M has got 70% of 114,500,000. 114,500,000. 114,500,000. So that is 80,150,000. 80,150,000 units. About product Y. About product Y, 34,350,000. 34,350,000. 350,000 units. 34,350,000. 350,000 units. Good. So if you are to be given a question that deals with the multiple products, will you be able to handle that? If you are to be given a question that deals with the multiple products, will you be able to address that? Good. So identify any question that I can be able to do before we move to limiting factor. Any question? Maybe some of us here are already attempted one or two questions under the multiple products concepts. Can you identify any that we can address before we go to limiting factor analysis? Identify any that we can address before we go to limiting factor analysis. Any that we can address before we go to limiting factor analysis. So I hope that one is addressing, that one is dealing with the single product and limiting factor. That one is dealing with the limiting factor analysis and single product. It's dealing with the limiting factor analysis and single products. Anyway, we can look at it. Now that there's no one who is bringing another question. We can look at August 2023, question number 3A. August 2023, question number 3A. August 2023. So as we prepare for our August exams, of course, we all know that in April sitting, April 2025, the limiting factor concept was tested. So as we prepare for August, we are expecting sensitivity analysis, right? We are expecting sensitivity analysis under this topic. We are expecting multiple products question. We are expecting single product question, or even a repeat of the limiting factor analysis, or even a combination of the two, both limiting factor analysis and multiple product or single product question. So that's you need to prepare for. You need to prepare for that. This topic rarely misses. If it misses, then of course you get now topic number 7, or an extension of this particular topic. So we have CPA, August 2023, question number 3. We can look at it very fast. CPA, August 2023, question number 3A. That is Urembo Lifestyles. So Urembo Lifestyles offers 3 different types of body grooming and fitness services. They are salon, gym, and barbershop, using the same staff. Various estimates for the next year have been made as follows. Number 1, we are having a service fee, which of course, when we are dealing with physical product or goods, we'll be talking about selling price per unit. When you're dealing with the intangible items, that is now the services, we talk about service fee. Then we have variable material costs, we have variable labor costs, we have fixed overhead costs. Anything variable, whether it is variable non-production or variable production, under topic number 8, the break-even point analysis classifies them together as variable costs, and of course the fixed costs are also classified together as fixed cost, irrespective of whether it is production or non-production expense. Then we have the labor hours per client. That is now the labor hours required to serve one client. Do we have expected number of clients to be served? Possibly that will be given somewhere there. Additional information. Number 1, the total fixed cost for the next year is expected to be 400,000. The total fixed cost is expected to be 400,000. Then number 2, the budgeted maximum. I want us to read that for the second time. The budgeted maximum demand of clients for the next year of the service is estimated as follows. Number 1, salon, we have 3,000. Gym, 1,000. Barbershop, we have 1,500. If you go up there, we're also given budgeted expenses at full capacity, right? Maximum demand at full capacity. So when you take 3,000, look at the fixed cost given there. When you take 2,000, multiply by, when you take 3,000, I want us to take this. I want to take 3,000 clients to be served at the salon, multiply by 90, plus 1,000 clients to be served at the gym, you multiply by 120, plus 1,500 clients to be served at the barbershop, you multiply by 40. What are you getting? And to give me this total amount, that's added together. What are you getting? When you take 3,000 by 90 plus 1,000 by 120 plus 1,500 by 40, what are you getting? What are you getting? What are you getting? What are you getting? Oh, good. Now, if that's under required, if the business were to offer salon services only, calculate the break-even number of clients. Calculate the break-even number of clients. Now, before you go to that, if the fixed cost per unit was to be fully absorbed, I expected this amount to be equivalent to what we are given under additional information number 1 plus 400. I expected this to be equal to 400,000. That was my expectation. Because we have not been given any information talking about actual being better than the expected. It was a budget. So as they do their budget, we are expecting that budget to be equivalent to what we are having there. Then another thing, I also want us to compare something, which of course will not be viable, but let's just compare and see. No, we'll come to it later under limiting factor. Now, when you come to this part, you are expecting these amounts. When you take 3,000 by 9, that is giving us 270,000. This one here is giving us 120,000. That is already 390,000. Then you take 1,500 by 40. Inaleta ngapi? Is it giving us 60,000? And that's why you're getting. So when you add this, you are getting 450,000. So we're expecting that this 450 was to be given under information number 1 as 400 as 450,000. But now, what is given in additional information number 1 is what we are going to use to be able to get the break-even point and all that. That is when we need our total fixed cost. We are going to use what is given under information number 1. But if it is not given, this is how you get your total fixed cost. If total fixed cost was not given under additional information number 1, then we use what is given. We use what we have there to be able to get the total fixed cost at full capacity, at maximum point of operation, So they're telling us if the company was to offer only salon services, so we have salon services here. We are given a service fee per client. We are given service fee per client, that is 300. We are given variable cost. And this variable cost, actually, it is not combined. We have material. So material cost, which is variable, labor cost, which is variable. So we have 140 and 60. We have 140 and remember you are supposed to deduct the ones here. When you deduct, what are you getting? Contribution margin. What is your contribution margin? Contribution margin 100. We are getting 100. Good. So do we have total fixed cost? Wacha tuone. Total fixed cost itakuwa ngapi? Total fixed cost itakuwa ngapi? Total fixed cost. $200,000, right? We don't take for just one product. Remember, for example, I want us to pick it from this point. RCM RCM Online College has got physical classes. RCM has got physical classes at Stanbank House, class 3. So those classrooms, they are paying what we call this rentals. And that was an agreement. So let's say they were supposed to pay, let's talk about 540,000 per year. They're supposed to pay 5,000 or 540,000 per year. Then in January, April 2025, maybe the college admitted 500 students. 500 students. Then in May, August, the number has dropped. So 2025, the number has dropped to 150 students. So the lease rentals, of course, you have an agreement, and maybe this lease is supposed to run for how many years? For 5 years. Now, my question is, if in January, April, only 500 students or 500 students were admitted or registered for their CPA course, then in May, August, we only have 150 students who have registered for the CPA course. Do you think we are going to interfere with the lease rentals? Do you think reduction in number of students will affect the lease rental agreements? It will not affect. So maybe the salon services here requires a space, and that building was fully taken, or that space was actually paid for under the lease agreement. Now, the company is supposed to incur 400,000. Whether they're going to offer the 3 services or just 1 service, this amount is constant. So the more services you bring, the more amount you're going to get, because this fixed cost will be distributed to all the services you are having there. But should you drop other services and remain with one, this one service have to bear the entire fixed cost. So if you're told to give us a break-even point when only one service is offered, we will not take this and divide by the 3 products. No. We take this whole amount and recognize it as an expense related to that particular service. So from all that story, why can't we now go ahead and get our break-even point in units? So that is total fixed cost, 400,000. We divide by contribution margin, which is 100. So how many clients should this particular company serve for them to be able to operate at break-even point? How many clients should they serve? I.e., 400,000 divided by 100. Good. How about if we are to get it in shillings? If they were to do it in shillings, it will be total fixed cost, 400,000, divided by contribution margin ratio, right? So contribution margin ratio is equal to contribution margin divided by selling price per unit. That will give us 100 divided by 300. Inakuja ngapi? 100 divided by 300. One 100 divided by 300. So we are getting 0.333. When you have decimal places like this, please try to maximize so that as you get to do the division, you will get a whole number. So what's the break-even point in shillings? $120,000. Or we already have break-even point in units. Can you take the 4,000 multiply by the service fee per client? I hope that also take us to the same point. That will also take us to the same. That will also take us to the same point. That will also take us to the same point. Great. So that is what you are required to do in that particular question, especially with regards to that part A. With regards to that part A. So part B, we are talking about prepare the limiting factor mix schedule to show the number of clients per service that maximizes profitability. The maximum net profit. Is it okay if we have like 5 minutes break to Kirudi to Malizia, then we go to the April city? Is it okay? We can have 5 minutes break. We can have 5 minutes break. Tukunywe maji alafu turudi. 10 minutes. We are not ready to come back to this topic after today's class. So 5 minutes is enough for us. Good. So I'm being told that something is wrong here. We are taking 4,000 multiplied by 300. So that would be 12. We bring the 2 and then we add another one. So it should be 1,200,000, right? 1,200,000. 1,200,000. Good. Now, having done that, we can now move to something else. That is limiting factor analysis. Limiting factor analysis. Under the same question. Under the same question. So I have to address the limiting factor analysis. So limiting factor analysis, we have limited resources. We have limited raw material. We have limited labor hours. Now, how can we be able to use these limited labor hours to maximize on the profitability of the company? What you have to do production is less than what is actually demanded by the market. Now, I want us to follow the procedure of what is given there. We are told that under number 2, prepare the limiting factor mix schedule to show the number of clients per service that maximizes profitability. So when you're going to do limiting factor analysis, you need to record it in this particular pattern. We have the 3 services now. We're talking about salon. We're talking about gym. We're talking about gym. Then we'll be having a barber shop. Then we're talking about barber shop. So we start with the selling price per unit for service fee. So we just with the service fee. Then we come to, we less all the variable components. Remember, we said topic number 8 is an application of topic number 7. And in topic number 7, we were focusing, application of marginal costing. And marginal costing is about bringing variable costs together and also taking fixed cost to be together. So we have 300, we have 390, we have 200. Then we go to variable material cost. So we have variable material cost. That is 140. That is 180. That is 100. And remember, these are expenses from the service fee. We deduct them. And then we have a variable labor cost. So we have variable labor cost. The variable labor cost, we have 60. We have 100. We have 50. What if we add variable production overheads? You also record it here. All the variable costs, variable selling and distribution, you also record it here. Then you now get what we call contribution. Contribution per unit or per service. Contribution per unit or per client. So it is service fee or selling price per unit minus the variable costs. Minus the variable cost. So let's get our contribution per unit. Let's get our contribution per unit very fast. Our contribution per unit. Contribution per unit, I'm told this one is 100. How about gym? 390 minus 280. 390 minus 280. 200 minus 150. We are getting 50. So remember, contribution is subtracting the expense. Now, if you are to rank this product at this particular point, which one will you take as the most profitable product or service? If you are to do ranking of these services at this point, which one will be the most profitable service? Which one will be your most profitable service? But let's be realistic here. If you are given a lot of money to do business, definitely you'll be doing well compared to someone who has been given less amount or least amount. So look at it. It is obvious that gym is giving us 110 because it has taken 3 hours. Look at what number 2 is giving us. Number 2 is salon. Salon is giving us, is taking 2 hours. So 2 hours, 100, 3 hours, 110, and 1.5 hours giving us 50 is actually making sense, right? It is making sense to some extent because the more labor hours you utilize, the more profit you get. That is according to that. But let's now look at it from this point. If you want to look at the return per labor hour, if you want to look at the benefit per labor hour, what will we have? Right? That's what you're going to do. So you cannot do ranking at this point. This one is still not okay because we are talking about 110 now that gym has utilized 3 hours. The one having 50 has only utilized 1.5 hours. So that should also be checked. Then another thing, if you are to go that way, then it means if barbershop is taking 1.5 hours and giving us 50 shillings, we expect 3 hours to give us 100. But look at what 3 hours is giving us, 110. So you cannot do the ranking at that particular point. That's number 1. Another thing that you need to understand, before even you get to this part, you must know the limited resource. You must know the limited resource. So have you been able to identify the limited resource? The limited resource can be material. It can be labor hours. Labor hours can be divided into 2. That is skilled and semi-skilled. So have we been given either quantity of direct material or quantity of labor hours, or even both? Have we been given that in our question? We have been given labor We have been given labor hours. So this is what you're supposed to do. If you look at information number 2, we are given budgeted maximum demand. Then number 3, we are given the total labor hours that this company has availed or is availing or will avail for the next year, right? So available labor hours. Look at the available. So available labor hours is equal to 9,900 hours. What we are doing here at this particular point is determining the limiting factor. Determining the limiting factor. Good. So we have a total of 9,900 labor hours. Under salon, how many clients are they supposed to serve for the entire year? In the salon, how many clients are supposed to be served? Somebody. How many clients are supposed to be served in the salon for the entire year? Additional information number 2. 3,000 clients. 3,000 clients. And how many hours do we need to serve one person in the salon? How many hours? How many hours do we need to serve one client in the salon? 2 hours, right? 2 hours. So that will give us a total of 6,000 hours. Let's go to the gym. The gym maximum clients is 1,000. And the labor hours required to serve one client in the gym is 3 hours. That will give us 3,000. Then in the barber shop here, clients to be served under information number 2 is 1,500. And the hours taken per client is 1.5 hours. How many labor hours do we need to serve all the clients in the barber shop? How many labor hours do we need? 2250 hours. Good. Can you add everything? So labor hours needed. So labor hours needed ni ngapi? Can you add the 3? Add these 3. Tunapata ngapi? Labor hours needed 11,250 hours. The company has availed. The company is only able to pay for a total labor hours of 9,900. What is needed to fulfill this demand of 3,000 clients in the salon, 1,000 clients in the gym, and 1,500 clients in the barber shop is equal to 11,250. Will they be able to fulfill this demand? Will the company be able to fulfill the demand? It is not possible. Why? Because the company can only afford to pay for 9,900 labor hours. And what is demanded to fulfill the entire demand is 11,250. So automatically we have a deficit, right? So how much is the deficit between what is available and what is needed? How many labor hours do this company require to add to this one here to be able to fulfill the entire demand? So the company needs 1,350 hours to be able to fulfill that shortage. That is what we normally call shortfall. So if you are told to determine the shortfall, that's the route you are supposed to check. Shortage. So if you talk about shortfall, deficit, shortage, in the resources required, that's how you do it. You first of all start with the available. Then you compare with what you need to fulfill the maximum demand. Total amount, we need 11,250. What's available is 9,900. For us to be able to achieve this, we have to sacrifice something. So you can see we have a deficit of 13,50. That deficit is what we call shortfall. Good. Now, with that shortfall, we are not going to close down and say they only want to go back home. No. We are not going to give up and say, let someone else do that. No. We are going to try as much as possible to advise the company on the proportion that will maximize the return from these limited labor hours. How do we help the company to do that? We must look at the profit we are getting from each service we are going to offer. When we leave it at the contribution per unit and say we are going to do the ranking, it will not make sense because in the gym, we are taking 3 hours. So when you take 110, that is somehow okay. We must make them to have equal bets so that we do the comparison. So from there, talk about limiting factor per unit. Per unit. This limiting factor can be labor hours, can be machine hours, can be semi-skilled labor hours, can be variable overheads. So we are not going to say specifically it is labor hours. No, it will keep on changing depending on the question will be given. But now for our case, the limiting factor per unit is labor hours per unit. Is labor hours per unit. For us to be able to serve our clients in the salon, we need 2 hours. For us to be able to serve the clients in the gym, we need 3 hours. For us to be able to serve clients in the barber shop, we need 1.5 hours. Can we now go ahead and get benefit per limiting factor? Benefit is the contribution per limiting factor. So contribution per labor hour. What is our contribution per labor hour? That is contribution divided by the limiting factor per unit. So 100 divided by 2, tutapata ngapi? 50. We are getting 50. 110 divided by 3. 110 divided by 3. 36.667. Then 50 divided by 1.5. 50 divided by 1.5. 50 divided by 1.5. 33.333. Good. So if you are, imagine at this particular point you did the ranking and you are telling us that this is number 1, number 2, number 3. When you come to this part, you now have to change that notion, right? So you'll have to change it. Why are we changing it? Look at it. If you were to convert this to get the benefit per labor hour, so if I convert all these things and have a common unit, that is 1 labor hour. If I use 1 labor hour in the salon, I'll be getting 50 shillings as the benefit. If I use the same 1 labor hour in the gym, I'll be getting 36.667. If I were to take the same labor hour and use it in the barber shop, I'll be getting 33.333. So if you are to invest, if you are to take this labor hour and use it somewhere that will help you to maximize on your profit or benefit, where will you utilize this labor hour? Where will you utilize this labor hour? Will you use it in the salon, in the gym, or in the barber shop? Where will you take it first? You will use it in the salon because we now run. In the salon, when you just use that 1 hour, you are getting 50 shillings. Assume you have been able to maximize all the opportunities available in the salon. You have served all the clients, but you still have some labor hours unutilized. Where will you take it to? the remaining labor hours. You have served all the clients in the salon, but you still have some labor hours, some time is left. Where will you take it to? We now take it to the gym, because if I take it to the gym, I'll be getting 36.667, which is higher than what I will be getting if I were to take it to the barber shop. So that will be number 2. You have served all the clients in the salon, you have served all the clients in the gym, but you still have some time that is left. Will you just relax and leave it there, or you can utilize it somewhere? If you are going to utilize it somewhere, where will you take it to? You take it to the barber shop, right? You take it to the barber, take it to the barber shop. Great. Before I proceed beyond this point, are we okay with all this section here? Because that is the concept. Once you get this part, there's nothing complex. You just need to give us the answers. Are we okay with this section here? Number 1, you take the revenue, selling price per unit minus all the variable cost per unit. Then you get contribution per unit. Once you have contribution per unit, you identify the limiting factor per unit. Once you have your limiting factor per unit, can you give us contribution per limiting factor? That is what we have done. In doing so, you have been able to make limiting factor uniform. If I use one limiting factor to produce product A or product B, what will be the benefit? That is now the contribution per limiting factor. So the higher the contribution per limiting factor, the more profitable the product or the service is. And that's when we now do our. Great. Having done that, I want us now to identify the actual production. How many units are you going to actually produce at this particular point? Go to the maximum demand section now. Go to the maximum demand. So our maximum demand, we have said that salon is the first service. So we come to the salon here. We come to the salon here. Or we can actually take it this way. Do I do it here? Yeah. This part will make a lot of sense. It will make a lot of sense when I do it this side. So you have said that salon, we start with available labor hours is 9,900. Now that salon is the most profitable, we start with the salon. How many clients were to be served in the salon? 3,000 clients. Then you multiply by the labor hours required per client in the salon is equal to 2 hours. So that will give us a total of how many hours? That will give us a total of 6,000 hours. So can we get the balance? The balance here is 9,900 minus 6,000. That will give us how many hours? That will leave us with 3,900 hours. We go to number 2. Our number 2 was gym. Our number 2 was gym. So gym, in the gym, how many clients were to be served? How many clients were to be served? 1,000. So before I even write what is required here, is it that if I serve 1,000 clients, if I serve all the clients and each, I am supposed to take how many hours? I'm supposed to take 3 hours. This is giving me 3,000, right? So is this 3,000 greater than or less than this? If it is less than this, then it means I'll be able to utilize or serve all the clients. If it is more than this, then I'll not be able to serve all the clients. So I can see it is only 3,000 and I still have 1,900 labor hours. So all the clients that were to be served in the gym will be actually served. So that will give us 3,000. Then we now get the balance. So balance will be 3,900 minus 3,000. It leaves us with 900. hours. Then we now go to the barber shop. We now go to the barber shop. In the barber shop, we are supposed to serve 1,500 clients. And each client requires 1.5 hours, giving us 2250 hours. The total number of hours required is more than the remaining labor hours. So we cannot serve all the 1,500. We cannot serve all the 1,500 clients. So what are we going to do? Now, when you get to that point, we don't do it directly. We say if 3 hours, 1.5, if 1.5 hours is equal to 1 client, if 1.5 hours is equal to 1 client, how many clients will we serve if we only have a balance of 900? If we only have a balance of 900 hours. So it will be 900 hours times 1 client divided by 1.5 hours. How many clients will be served? How many clients will be served? 600 clients. Good. So if it was production or purchases, have you ever gone to a shop to purchase some items? Let's say you are in need of 15. You are in need of 15 units. But when you get to that shop, they are telling you, okay, physically, if you look at the shop, you are able to see only 10. You are able to see only 10 items. But remember, you are in need of 15. Then, whoever is there at the shop will tell you, just give me like 2 minutes. I pick the remaining units from our store. They normally tell you, just wait for me. Give me like 5 minutes. I pick the remaining units from our store. Have you ever been told such a thing? Have you ever been told such a thing? That you know what? Yes, you need 15. At the shop, you can only see 10. They're telling you the remaining 5, let me go to the store and pick them. Are you sure that they normally go to the store? Is it normally a real store? It is normally not a store. It is not a store, right? It is just a store. But they go somewhere else, purchase it, bring it to you, and sell all the 15 units that you needed. When they go and pick it from somewhere else, they don't have the capacity to provide it. So what happens? They outsource. What you cannot provide, you'll be outsourcing so that you fulfill the entire demand. The same way, we are supposed to serve 1,500. You are to serve 1,500 clients in the barber shop. But because of limited labor hours, we've only managed to serve 600 clients. Where will the remaining 900 go to? What will happen? You will tell them, please, just come to our branch here. You'll also be served. That is not their branch. That is just a way of outsourcing, right? They are outsourcing that particular item. They don't want to let you go. So that next time when you'll be coming, will be saying they don't have capacity to serve you. No, they want you to keep on coming. So they tell you, let's go to our branch here. You'll be served, right? Yeah, so that's what they normally do. The same way, if you're dealing with physical goods, right? If you're doing production, we only have 9,900 hours. So if you do the production, you have produced the first product, the second product, the third one, you cannot produce all the units that were demanded. You've only managed to produce 600. These 600 units, you will be, the remaining 900 units, you will be outsourcing from somewhere else. Remember, whoever will be selling it to you will not charge you the same amount you are going to charge your client. For example, at the barber shop, everyone will be paying 200 shillings. right? They're supposed to pay 200 shillings. If you are to outsource, if you take them to another barber shop, do you think they'll be charged 200 shillings? No. You'll actually tell the barber shop there, in the barber shop, you'll tell them, you know what? I'm bringing to you 900 clients, and please just serve them. I'll be able to pay you. Don't let them pay you. So these clients will be paying the first person here, all the amounts. Then as you go to outsource that, you will not accept to be charged at 200, because if that is done, there's nothing you are going to get. So what happens? We'll tell them, please, you are going to charge me 150 per client. You're going to charge me 140 per client. That remaining amount is your benefit, is your profit. So that is what is normally happening. You cannot accept to transfer them, and again, they be charged the exact amount of 200. Now, if you are to do the production, if you're dealing with the goods, the number of people will be actually served. So actual production or actually served clients. So actual clients served. Actual clients served. Number one, in the salon, you will serve all the 3,000 clients. In the gym, you will serve all the 1,000 clients. In the barber shop, you will serve only 600 clients. Where will the remaining 900 go to? That is now actual clients served. Actual clients served. So the remaining people, the remaining 900 clients will automatically be taken to what we call, so outsourced. So which service are you going to outsource? The barber shop. You have to outsource. If you're going to outsource, at what price? Number one, I will be outsourcing for 900 clients to make it the 15 which was demanded at shillings. You are not going to incur the labor cost here, the material cost. No, you just tell them, go to that place, you'll be served, and I'm going to pay everything. So if you end up paying 150 per person, it is that particular shop that will be now incurring these other expenses. Your work is just to pay the amount you'll agree upon. So if you are to outsource the service for the 900 clients, you'll be told maybe at this particular amount. In our question, it was not there, or it is not there. In other questions, you will find that whatever they cannot produce, they will outsource. At what price? Right? So I'll be able to tell you once we get to this part and know how to deal with the outsourced section here. Now, actual clients served, for us to get total contribution, it is 3,000 times 100, 1,000 times 110, 50 times 600. Then the outsourced, we have its own price. Good. So I want to bring it up here. I want to bring it, should I bring it up? I can just go with this part here. Let me go with this part. So you have been told to give us what we call net profit. What is the optimal profit? What is the optimal profit as per the actual production mix? Optimal profit. So this optimal profit that will maximize the profit of the company is basically 3,000 clients. So it's just start with the total contribution. So our total contribution is equal to, we are serving 3,000 clients. Actually, you are supposed to get profit, sales or revenue. The question is, if service fee in the salon is 300, I will be multiplying by 3,000 clients. variable costs depend on the number of clients. Again, 140 by 3,000. Then I will also take 60 by 3,000. So it is total revenue minus total variable cost. Why should I go back to all those procedures, yet the contribution per unit as factored in the variable components? If I were to take 3,000, this is what I'm talking about. Just don't write. If you want to get total contribution, we'll be taking 3,000 times 300, right? Minus 3,000 times 140 minus 3,000 times 60. That's what we'll be doing. Why should I keep on redoing all these? Yet I know all of them are dependent on the units of output. So what do I need to do? Take 300 minus 140 minus 60 and get 100. Then just take 100, multiply by the 3,000. We'll end up having the same contribution. So instead of going back to revenue, I don't do this. I just come and pick this one here because it will give me the same thing. That is why when you are doing what we call limiting factor analysis, arrange your work in this particular order. Have the selling price or service fee per unit, variable cost per unit, contribution per unit. So that when you are told to give us optimal profit, you don't have to go back and calculate the variable expenses. So for me to get total contribution as per this actual production mix, I'll be taking 3,000 for the salon, multiply by the contribution per client, plus 1,000 clients in the gym times 110, plus 600 clients in the barber shop, we multiply by 50. So when you do that, you will get total contribution. What is your total contribution? What is your total contribution? Total contribution. $3,000 by 100, that is 100. That is 300,000 plus 110,000 plus 30,000. What are we getting? 440. So we are getting 440. 440,000. Then we now less the fixed expenses. So we can have fixed production overheads. We can have fixed non-production costs. We deduct that. So less fixed cost. What was the total fixed cost? What was the total fixed cost that we are given? Total fixed cost ni ngapi? Total fixed cost. $400,000, right? Good. Can we get optimal profit? So optimal profit here, we just get our net profit. Net profit itakuwa ngapi? Net profit itakuwa ngapi? Somebody to assist us there. Somebody to assist us there. Net profit itakuwa ngapi? Net profit itakuwa ngapi? Net profit itakuwa ngapi? $40,000, right? That is if you are not told that whatever they could not produce was to be outsourced, right? You can see there's nothing like whatever they could not produce was to be outsourced. That has not been mentioned anywhere. That has not been mentioned anywhere. So this was supposed to be your answer. Now, the next thing is, what if you are told that whatever they could not produce with the 9,900 labor hours was to be outsourced? At what cost was to be outsourced at 170. What they could not produce was to be outsourced, or those whom they could not serve at the barber shop were to be transferred to another barber shop, where this company will be paying 170 for each person served there. What will be our resulting net profit? So if that's the case, we only need to do a very simple thing. If that is the case, actually, let me go away with this part so that you know what you're supposed to do. If you are told to incorporate the outsourced services at this particular cost, so what is the total optimal profit for this particular company? This is what you are supposed to do. You first of all start with the total contribution from clients served. So they served 3,000 and the contribution is 100. Plus they served 1,000 times 110. Plus they served 600 times 50. If I bring all this together, we are getting 440,000. Then we go to total contribution from outsourced services. Total contribution from outsourced services. How many clients were transferred to another barber shop? How many clients were transferred to another barber shop? How many clients were transferred to another barber shop? It is the 900 clients, right? So it is the 900 clients. We multiply by the contribution. How do we get contribution? Just type it down there. The formula of getting contribution. We have been talking about it in this topic number 7. How do we get contribution? How do we get contribution? How do we get contribution? Contribution. It is selling price per unit minus variable cost. What is the selling price per unit or the service fee per client in the barber shop? What is our selling price or service fee per client? Service fee itakuwa ngapi? I want you to also consider what we have been able to put here. 200 minus 150. Mtu anatuambia 200 minus 150. So the question is, did they serve these 900 clients? Were they served internally? Simon, help us there. Were they served internally? So why are we talking about variable material cost and variable labor cost? Right? So that was not correct. But the selling price is correct because all these people will be paying 200. Watalipa 200, that is the service fee, but we need to less the variable cost. What is the variable cost per client here? You will not incur direct labor. You will not incur direct material, but you will pay the person who will be offering this service, the outsourced person. If you are dealing with goods, we'll talk about purchases, not production now. We'll be talking about purchases. So the outsourced service, you yourself, you paid 170 per client. That is variable cost because it depends on the number of people you'll be transferring to the other barber shop. You have to pay 170 per person, but these people paid you 200. Each of them paid you 200. So the revenue you received is 200 shillings. But the amount you are paying out for them to be served by the other person is 170. So that is the variable cost for you when you now transfer them to the other person. So 200 minus 170 will give us 30. Can you take 900 by 30? Good, so we add. So total contribution. Now, it is very simple. Somebody is asking, how are you getting 170? Do you have such a question? Do you have such a question? How are you getting 170? Thank you. Can someone respond? Where is this 170 coming from? Thank you, Yvonne. I said the first answer we got here was as per the question, the way it was given. And then I told you, what if in your exams you are told that whatever they could not produce was outsourced? At what price? In our question, there was nothing like that. But I've said, let's assume they were outsourced at 170. So this 170 utapewa for exams if they intend to ask you anything about the outsourced services or product. So in this question, I assumed 170 to explain the concept. So what is our total contribution? That is contribution from the services they offered internally and the contribution from the services that were outsourced. Itakuwa ngapi? 467. Then you now less fixed cost of 400,000. Less fixed cost of 100,000. So what is the net profit? Net profit itakuwa ngapi? 67,000. Great. That is what you're supposed to do in this particular question. We are done with topic number 8. So from Friday, the first 1 hour, we'll be utilizing that to do our revision. Then the last 1 hour, we'll be continuing with the syllabus. Under the first 1 hour, it is not a must that we must come to topic number 8. We must follow the order. No, go to the topics that we've already covered. Is there anything that we're not getting? And mention a specific question. We do it here together. The only thing you should not do is, should not bring a question that's already covered in this. For example, topic number 8, we are doing revision under topic number 8. Then you are telling us we revise CPA August 2023, question number 3. Yet, you already have the video for this particular question that we will not do in class. But if it is a similar concept, a different sitting that we have not done in this semester, then of course we'll gladly look at it together. I will not bring the questions we will be doing. It is you to do the revision, check what you've not understood, bring it here, then we do it together. The only question I will be bringing in is what we are covering under topic number 9 and topic number 10. But what we have done, you now attempt a question. If you are defeated, you bring it here, we do it together. What if you are not told to assume? If you are not told to assume, that is what I did in the first place, which was giving us a profit of, it was giving us another profit here. It was giving us a profit of 40,000. So the first one is what you are given in the question, but the second one we have assumed. Is that okay? Good. So all the notes, if you go to the group description, I'll be changing a link for all the notes, topic number 1 to topic number 10. If you go to LMS, there's somewhere there indicated notes and course outline. When you click on that link, you will get all the notes from topic number 1 to topic number 10, including the theory questions and answers. So let's meet on Friday, which will be our first lesson and a revision.